Hi, I just wanted to go over the market today. It's March 10th, 2010, and we had a really interesting day today. Um, Partially because the S&P has been so slow lately. Looking back at the 2-minute chart here, I got to go back. Um, it's been slow because volume has been lower than usual on the S&P. This is my 2-minute chart, which generally runs fairly smooth, but it's extremely choppy back and forth on all these candles, and it makes it a little difficult to trade. So we start exploring different markets. Well, we look at the Russell today, and the Russell runs a lot smoother. Can you tell the difference with the movements here in the candles? It's not nearly as choppy. It's in fact quite smooth. And so I like this market. This is what I traded today. Just to give you an idea of what we can teach you to do in our school, we have a simple strategy, simple signals, and with our signals, I got in pre-market. Now I used a 1-minute chart, not the 2-minute chart, which I'm looking at here for my entry here, but some pre-market movement to jump into this trade as the market took off, and I made 1 point here on the Russell. When 1 point on the Russell, money value is equivalent to 2 points on the S&P. So today I hit 1 point there. I took a half point on this signal here going long, and then I let this kind of reverse back, create another very strong signal to buy at this point, and all I pulled out of this was another point right here. But look at the potential it had. Okay, I had a 1 point win here, but I had over 2 points potential on this move alone. And then we had another signal happening right here with our lowers coming into here, a perfect entry, and another several point potential on that, which I did not end up trading. I hit my profit target. I was happy for the day. So it was a wonderful day, especially on a day which normally I wouldn't be able to find a signal good enough to trade on the S&P. Now, when we start looking at different markets, you've got a lot more opportunity out there, and we can look at the mid cap as another alternative that has similar properties as the Russell as far as tick value and the way it moves. But just to give you an idea, let's look at what happened for me today. On the E-mini Russell 2000, we've got a tick value of $10 per tick per contract. Okay, so you can control a contract for $500 and on margin, and 1 tick of movement. Tick is the smallest increment of movement within the market. You got $10. 10 ticks per point, so it moves in tenths. So 1 point is equal to $100. Now I made 2.5 points today in as little as a half hour of work. That's not a bad day job. Now with one contract, you've got 2.5 points, one contract. That's $250 within the about a half hour range of time. Not bad, but the goal here is to become consistent enough that you can start adding more and more contracts. And so slowly and surely you can add more and more contracts, and then the value or what you gain out of the market becomes a lot greater. Let's say 2.5 points now at 10 contracts. Well, in a half hour time, you made $2,500. There's power in a strategy that can give you consistent results like this, and this is how people can become professional day traders. You can make a good side living doing this. It doesn't take a lot of time. We trade the first hour of the market and we're done for the day. So you can still keep your full-time job and do this on the side, or you can build this to literally replace your job and become a full-time day trader. If you want to learn how and see some demonstrations of my own trades, come to www.learntowintrading.com. We'll see you there.